Alrighty.
Okay, it's Tim with another Facebook Live here for Compass Property, and I've got Karen with us. Karen, what have
Hey
you
Tim,
gleaned?
happy Wednesday.
Happy, yeah, Mum's Day's coming up.
Yep,
Thank you for the reminding me, and everyone else. Don't forget this Sunday, Mother's Day.
look
So,
after your mum.
absolutely. Now, Karen, what have you gleaned this week from all the questions and things that people ask in about? What's the topic?
All right, Timmy. So in my scrolling of Facebook and social media in the last couple of weeks, there's a video that's doing the rounds at the moment, and it's an old one from 1991. So let's all think back to what we were doing back then, huh?
It's a while ago.
Yeah, it was. And it's Kerry Packer addressing.
I love Kerry.
Yeah, he's a pretty cool guy. And he's talking about tax minimization. And
Yes.
the video, we're going to actually put a link in the comments here, because it's a video saying basically he was accused of not reducing his tax but minimizing his tax, and he kind of said to everyone, of course I'm minimizing my tax. Anybody who's not minimizing their tax needs to get their heads read.
Yeah, they need to get their head read, and
Yeah.
and then he went on to say, which I just love. I love the video. I know the video you've got. He went on to say that and you, the government, are not handling the money you have now that well. So there's probably no reason for anyone to give you any extra because you're not doing a
I
good job.
love that.
It's a great one-liner, and
Yeah.
I wish Kerry was with us today, and he was on the ballot box for the election coming up, because I tell you what, he put Australia in a much better place. But that's another story. So, well, minimising your tax, which is totally legal, a lot of people just aren't doing it, and they should be.
Yeah.
Everyone can, particularly if you've got income coming in. The government want their slice of the pie. It's called tax. Okay, so you can minimise tax quite legitimately, and the number one way of doing that in Australia is having a business, or an investment property, which is a business in itself. Okay, so the rules of engagement with the ATO are such that if you've got a business or an investment property, you're doing something to make money. Okay, so any expenses that are derived in making that money are tax deductible. Okay, so in a business, you can understand that. They claim everything they can, and of course, with you creating wealth for yourself for down the track with an investment property, you'll be able to claim the obvious, which is the interest on your loans that you have. You'll be able to claim the costs of the solicitors. You'll be able to claim the costs of the property manager, and so on.
Real estate. Sure.
Everything. There's a whole gamut of them.
Lots of obvious things, but we were talking about something that's not quite so obvious, and I myself am guilty of not doing this, Timmy, so I need a bit of a slap on the wrist.
Look, I've heard a statistic that up to 80% of people are guilty of leaving this on the table, and I can't believe. If it was 38%, I'm still amazed, but they reckon it's 80%. Okay, what is it?
I'm proud of that.
Here it is. Tax depreciation. Your depreciation of your asset. You can, just like you have a car, you can depreciate. So does certain items in your house. Your fixtures and fittings, which is your air conditioners, your dishwasher, lots of other things in the house, and of course the house itself depreciates. 2.5% every year over 40 years. Now you can claim that with your accountant and get lots of yummy tax deductions. And they're saying up to 80% of people don't do it. It's just criminal. They should be doing it. It's criminal they're not doing it, But the thing is, you need to get a tax depreciation schedule done. And that's got to be done with a licensed quantity surveyor. Now, they're all big words, but you're just people that actually go through all the plans of your house, and they look at everything, and they come up with a schedule, a tax depreciation schedule, which you take to your accountant, and then your accountant gets lots of tax back. Accountant can't do it. You must go to a tax depreciation schedule place to get that. And of course now it can be done. It can be done online and with plans. Now, I'm a big believer in this, and I think it was back in 2011, I got the biggest tax depreciation schedule company in Australia. I won't mention their name just yet, but we bashed them down because everyone was charging about $800.
Which is why I've not done it. And this is the thing, because I have an existing property as my investment. And I sort of am, I guess, a little bit naive in thinking that, well, I can't really claim very much. So would I want to spend $700 or $800 on a report to find out maybe I may not even pay for that report? So,
sure. Well,
yeah,
I've got good news, because we've got the price down to $350 plus GST.
wow. Okay.
You know, because of the volumes we put through, and I'm prepared to give that to anyone, whether you're a client or not, because I'm that much of a believer in it. So I believe we're putting a link after this video.
We can arrange that, yeah.
We can arrange that, hopefully. And just no questions asked. You can have that. It's a gift. I don't take commissions from anyone's in that department, so it's fine. That's why it's a good price. But it's essential that you don't leave crumbs on the table, and it's way too much money to leave behind. Now, if your accountant's doing it without the depreciation schedule, they're probably not claiming everything. So I'd be going straight out and getting a new accountant. But that's a separate issue. Anyway, I'm going there. And, but that's the big tip of the day. You know, minimise tax the right way.
Just help me out a little bit, Tim, because I don't know a lot about this myself. So you do it once and then that's it, or do you have to do this every year?
That same report can be used over the next 40 years. Well, actually,
40
some
years,
companies only do because the house takes 40 years to depreciate totally.
Okay.
But, some companies only do it for 10, so you got to go back. This company will do that the whole lot, 40 years for that one price.
Wow.
So
so do it once and then it's done.
Then it's done. And of course, if you buy anything else, any maintenance that you have to your properties, if you have to buy a new dishwasher, or you can depreciate that out as well. You know, there's a lot of things that you can do, and you just need to be sharp on it. If you've got a good accountant, they'll be right onto it. So,
and really, if you have a brand new investment property, you have to do this, right? Like, you're absolutely
you don't have
crazy
to,
if you don't.
you'd
have rocks in your head. Yeah, because when the newer your property is, obviously the more you can claim back, right?
Correct. It's like having a new car. In the first few years, there's lots and lots of yummy tax deductions, you know, and it's criminal that people just leave that on the table. So we need to spread the word with this video. You need to actually like us. If you put a number 1, if you're watching live, 2 and review, but most importantly now on Facebook, Karen, it's press the love heart. And so,
please hit the love button. Show us some love. That actually helps us to be able to extend our reach with the videos. And
don't be afraid to share this, because it's good information. There will be it's a good offer. And if you want to just ring up and have a chat and ask some more questions about it, we're more than happy to do that as well. So, but have a listen to Kerry Packer on that. It's only a short video. Just chop it down, I think, to the nitty gritty. It's a very, I think it's one of the best videos ever cut, and I wish it was still around.
Fantastic. Yeah.
It's great. And so that's what you need to do.
Cool. So just to remind everyone, normally quantity surveyor reports are around $700-800. Maybe some might do them for $600. We can do that for the price of what? $350?
$350 plus GST.
Plus GST. Okay.
But
so
you've got to come through Compass to get that. If you knock on their door, I don't think they're going to honour it, because it's a pretty good deal.
Sure. So send us a message, and in the comments, or comment yes please, or send us a private message, and we'll get back to you with a love heart, because we like love. It's not even Valentine's Day.
And don't forget this Sunday, love your mother.
Love your mother. This is true. All right. Great chat, Tim. Minimize your tax. If you don't, you're an idiot.
Well, you're donating money to people you don't know and you don't like, and as Kerry said, the government aren't spending it that well, so you don't want to give them too much.
This is true. Cool. All right. Hit us up if you want a discount on your quantity surveyors report, and find out how much you can be claiming back on your investment property that you don't already know about. Excellent. Well, we'll see you back next week with another awesome topic on our lives. Hey, Tim.
That's right. Can't wait. Talk soon. Everyone take care. Bye.
All right. See ya.